Today, we're talking about the 3 most common mistakes that we see physicians make when it comes to the backdoor Roth IRA contribution. But first, let's talk about why the backdoor Roth IRA is such a great thing. Think in retirement, once you're ready to start enjoying all that you've worked so hard for so long for, that when you start to pull out all your money, every single penny is taxable. Sounds horrible, right? Well, the backdoor Roth IRA can help give you a big bucket of non-taxable assets to pull from to help mitigate your tax burden in retirement. So we absolutely love it here at Panoramic. And before we get into the 3 mistakes we most commonly see, I first want to say it's an even bigger mistake if you're a physician and you're not even doing a backdoor Roth IRA contribution right now. This is something you should be doing every single year. And if you're married, you need to be doing it for your spouse every single year as well. And there's a couple reasons why. Number one, you probably only have a 401k or similar retirement plan at work, but that's not going to get you to the minimum 15% of your income that you need to be saving every year to be able to be on track for a reasonable retirement. If you even have access to an HSA, aka health savings account, and you're using that to save for retirement, it's still not enough to hit that 15% mark. So to be able to save that 15% mark, you're going to have to save above and beyond what your employer offers you. And to do that, most physicians who don't know about the backdoor Roth IRA are just going to put it into a taxable account. Now, while that's going to get you to 15%, the bad part about that is it's taxable. And so guess what? When you hit retirement, you're going to have to pay tax when you withdraw those assets. With a backdoor Roth IRA, you don't have to do that. So if you're not already doing a backdoor Roth IRA, I can't stress enough as a physician how important it is that you need to start doing this. It's a big mistake not to. It's also a big mistake if you were funding your Roth IRA directly all throughout training and then make the jump to attending and are still funding that direct Roth IRA. We're going to get into this in a moment, but you make too much money to be able to do that anymore. And if you're still doing it, you're going to have to reverse all of those contributions and pay penalties and taxes. And that's another ginormous mistake that we don't want to see you making before we even get into the most common mistakes people are making when they're actually doing these on a regular basis. So with that, let's jump into these 3 common mistakes. Number 1, the backdoor Roth IRA is not an account. It's a strategy, or in other words, it's a process that happens. So you can't just go to Vanguard or Schwab and say, hey, I'd like to open a backdoor Roth IRA. That doesn't exist, and the person you're talking to probably won't even know what that is. The backdoor Roth IRA is a bit of a process. So let me walk through this from a technical standpoint. When you're in training, your income is pretty low, and so you're able to make what are called direct contributions to a Roth IRA because your income is so low. However, the IRS sets specific limits that you're probably very easily going to exceed once you become an attending, that forbids you from making these direct contributions to a Roth IRA anymore. So what is one to do? Well, back in 2010, there was a law change that pertained to these things called Roth conversions that allowed this process of a backdoor Roth IRA to become possible. And what that process from a very high level looks like is, instead of putting money straight into a Roth IRA, which you no longer can do typically as an attending because your income is too high, is that you first need to put it into a traditional IRA, and then you need to convert that money from the traditional IRA over to the Roth IRA. So at the end of the day, you're still getting the money into the Roth IRA, but you're having to take it through an extra process to complete the strategy. Make sense? If your mind's swirling a little bit right now, I don't blame you. This is why I've worked so hard to come up with a great analogy that I frequently give in my presentations to residency programs across the US. And this is what it is. Think of a backdoor Roth IRA process as like taking a flight across the country. So for this situation, I'm going to use, LA and New York. If you fly direct from LA to New York, very easy, right? You hop on the plane. When you get off, you're already at your target destination. But let's say all of a sudden that LAX no longer was allowing direct flights from LA all the way to New York. Does that mean you can't get there anymore? Absolutely not. It just means you're going to have to do what? You're going to have to take a layover at some other airport. Let's just say Dallas-Fort Worth in this example. So for this case, instead of flying directly from LA to New York, you're going to fly from LA to DFW, and from DFW, fly into JFK or somewhere else in New York to be able to still get to your destination. It just required an extra stop, right? Well, the backdoor Roth IRA is exactly the same. Instead of going direct from your bank account into a Roth IRA like you normally did during residency, now all of a sudden you've got to send it to a layover spot, to an IRA, traditional IRA, and then from that IRA convert it to a Roth, still at the end of the day getting to the same target destination. That's basically what a backdoor Roth IRA is. Now, there's a lot of nuances that go into that, which leads me to mistake number 2, and that is ignoring the pro rata rule. The pro rata rule, again, is a very nuanced thing when it comes to tax law that says if you have any pre-tax money sitting in a traditional IRA or a simple IRA or a SEP IRA, when you're trying to do these conversions that are part of the backdoor Roth IRA process, you're going to get taxed on that conversion, which is what we don't want to do because you already paid tax on this money in the first place. Essentially, you're going to get double taxed if you suffer from this problem. And we would not recommend doing these backdoor Roth IRAs until that money is not in those pre-tax IRA accounts no longer. So what you need to do if you suffer from this problem is quite simple. You're going to need to get that money out of your pre-tax IRAs into an employer retirement plan, or if you're a 1099 physician and you can set up a solo 401k, we're going to need to get it into the solo 401k. Either way, it can't be in those IRAs when we're doing the conversion as part of the backdoor Roth IRA process. So we've got to first get that money out. Otherwise, we're going to suffer from double taxation, which does not make this a good strategy, right? But I can't tell you how many times we see physicians do this because they're unfamiliar with the laws. They understood a backdoor Roth from the high level, but didn't get the nuances. And so it's very important if you're doing these on your own to make sure that you're doing them the right way every single year. And if this isn't something that you understand very well, you need to hire a professional firm that knows physician strategy really well, like Panoramic, to help you with the process. Lastly, mistake number 3, and this is one that we see on a constantly recurring basis, even with our own clients, and that is failing to file Form 8606 with your tax return or filing it incorrectly. So every year when you file your taxes, you're going to get what is called a 1099-R from the custodian or the financial institution that you hold your IRA and Roth IRA that you're using as part of your backdoor Roth IRA process. That 1099-R is going to document that conversion from the traditional IRA to the Roth IRA. And on the document, it's usually going to say that this conversion is taxable. And then underneath it, a box is going to be checked that the taxable amount is not determined. And that's just the financial institution saying, hey, we don't have enough information to know whether this was taxable or not. So guess what? When your CPA gets this, or when you upload this to TurboTax, they're going to count it as taxable. Well, guess what? That's exactly what you don't want to have happen. But without the proper information, you're not going to be able to get this filled out correctly or have your tax professional fill it out correctly unless you provide more information. And so when it comes to our clients and their tax professionals, every single year, not only are we sending these 1099-R forms to them, but we're sending a special notice that describes the backdoor Roth IRA process, why that conversion is not supposed to be taxable, and then we double check that the actual filing got done right and that the conversion was not taxable. And I'll tell you, just because you did it one year with a tax professional doesn't mean they're going to do it right the next year. The more often they do it, the more likely they are going to get it right and they are going to file this correctly. But you still have to check every single year because we've had instances where the CPAs filed it right for years and then they did it incorrectly because a new staff member came in or something. So this has to be checked every year. Otherwise, you could very well, again, suffer from double taxation, which makes this strategy completely useless. So if you have a tax professional, make sure you're clearly communicating this to them. And if you're doing it on your own with like a TurboTax, make sure that you're inputting it correctly by finding a guide that can help walk you through it. Because at the end of the day, not only do you want to be executing this strategy, you want to execute it correctly for it to have the biggest impact on your future retirement. So if you're a physician, I hope it's helpful to learn what the 3 most common mistakes are when it comes to doing a backdoor Roth IRA. So hopefully you can prevent that in the future. And if this is something that you need help with or something you want to execute that you're not already doing on your own, please reach out to us. We'd love to schedule an introductory call.